All right, let's get into it. What's good? This DJ Smoke, and we are doing a market recap. This is the real. We're doing a recap of the past week, October 13th through the 17th. And let's get into it. So let's talk about the index performance. So we had the S&P 500 rose approximately 1.7%, and this was its strongest week in approximately 2 months. So as far as the Dow gained approximately 1.5 to 1.6%, while the Nasdaq led with approximately 2.1% weekly uptick. So on Friday itself, saw a modest gain of the S&P 500 with a 0.5%, the Dow with a 0.5%, and the Nasdaq with a 0.5%. So the week was marked by volatility driven by easing trade rhetoric with US versus China, banking stress relief, strong tech, AI rotation, and hopes around Fed rate cuts. So didn't I tell you that last week, the biggest thing that everybody had their eyes on, investors were focused on, was the earnings of the banking. All the banking companies, major banking companies, including JP Morgan, have all had their earnings last week. And those earnings were modest. They were pretty good. It wasn't anything bad. So it looks like we're going to be, somewhat strong moving forward. Now we are going to have some Fed speeches that's coming up on the 28th and the 29th. So this week alone is going to set the tone or the catalyst or the sentiment moving forward. So as far as the index, Friday, October 17th, we closed on the S&P 500 at 6,664 and 1 cent. The Dow Jones closed at $46,190.61. Then we had the Nasdaq Composite at $22,679.97. So the market drivers, let's get into what really pushed the markets last week. So like I said previously, we had US and China exchange. So the US versus China trade tensions that was going on all last week and the week prior, or specifically Friday, when Trump came on Truth and said, you know what, I'm tired of China controlling 70% of Earth's rare metals. We got to do something about it. So markets rebounded after Trump softened his 100% tariff threat on China. He said, you know what, China is not that bad. China doesn't want to enter into a trade war. We don't want to enter into a trade war or recession. So let's come to a consensus, let bygones be bygones, and let's try to come together and, come to a decision. So that led to a tone shift, which lifted chip stocks and overall sentiment. Analysts warned the S&P 500 could drop approximately 11% if tensions return and continue. So as far as the regional bank stress, credit worries resurfaced as loan losses rose in smaller banks. We've had strong earnings from Truist, Fifth Third and Huntington, East Fears, and Jamie Dimon warned of possible deeper credit risk. So as far as the macro and government shutdown, federal shutdown delayed key data, fueling uncertainty. We had the ADP report showed approximately 32,000 job losses, which was the worst since 2023. So keep that in mind. As with the banking earnings, with possible rate cuts, things are looking good. But as far as the ADP, we've had approximately 32,000 job losses, and this has been bad since 2023. So as far as like the macro, it looks like, we might be good, but in between from the macro to micro, not too sure about where we're headed. So weaker data boosted rate cut expectations, and we also had treasury yields that fell. Now commodities, safe havens, gold being my favorite. Gold hit a record high above 4,100 per ounce, specifically around 4,300 per ounce at its all-time high. With silver reaching multi-decade peaks, investors also piled into metals as protection against volatility. So like I keep saying, that you must understand that gold is a safe haven because gold is a real asset, is real money. It's not like the fiat money, the paper that we hold in our pocket. Gold is what's going to be here, you know, from now into the end of time, in my personal opinion. You know, things might change, but gold, silver, things like that are going to basically are going to be the hallmark of our finance. So as far as earnings and sector rotation, we had Broadcom surge approximately 10% on OpenAI chip deal. Nvidia and Tesla rebounded. Tech and AI led the rally while money rotated into defensive sectors. So what's upcoming tomorrow, October 20th to the 21st? We've had earnings, and we're going to have a heavy week. When I mean a heavy week, we having a lot of big names on earnings. We got Netflix, Tesla, P&G, plus major banks and tech stocks. We have around 80 S&P 500 companies report. Expect headline-driven volatility and sharp moves on guidance. So banks and credit cycle signals, JP Morgan, Goldman Sachs, and other reports key red on credit quality, loan losses, and economic health. So watch for big swings in regional and large bank stocks based on these results. So U.S. economic data and Fed Watch key reports that you should be looking at is CPI, initial jobless claims, and Fed speeches could shift rate cut expectations. So one thing that you want to remember, weaker data equals lower yields and market boosts, while stronger data equals higher yields and pressure on growth stocks. Some releases may be delayed due to the government shutdown. Remember, keep that in mind. We are still in a government shutdown. So a lot of things might be out of the norm or the status quo, but you have to keep in mind things might still perform well, but those things, or I should say a factor like that, the government shutdown, will impact certain things in the market. So as far as earnings reports, like I said, we are having a lot of big players, a lot of movers and shakers that are stepping up this week. We got Tesla, RTX, which is in pretty much a partnership with Nvidia, AT&T. But let's try to go down the list. Monday, we're having Steel Dynamics, WR Berkeley, Crown Castle. As far as Tuesday, RTX Corporation, Coca-Cola, General Motors, Netflix. Wednesday, AT&T. And everybody, in my personal opinion, including myself, I feel like everyone has their eyes on Tesla Wednesday. So like I said, this is going to be a big week we have month over month CPI data, along with initial jobless claims and other things that will impact the market. But Tesla, along with these other stocks, and on Thursday, Intel, Union Pacific, Newmont, and Friday, we have Procter Gamble and HCA Healthcare. It's going to be a very volatile week. As you can see here, volatility incoming as earnings season heats up. Watch for moves across tech stocks, defense, autos, and consumer staples. So the question that I have for you guys, which reports are y'all most hyped for this week? Like I said, it's Tesla, and I feel like this will really move the markets. But it may be an opportunity to make some gains elsewhere. If you'd like to learn more, click the link in my bio, join the team. Tap in for the Chrome traders. Again, I'm going to say it over and over and over. We have been running it all year long. Y'all go ahead, support by giving me a follow, subscribe, engage. Give me a like, give me a follow, like I said, because this is DJ Smoke, and I just put you on game.